All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for September 9th, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode number 446. Also, if you have not heard yet, be sure to mark your calendar to join us tomorrow, Wednesday, and Thursday. That's September 10th, 11th, and 12th for our big annual Fibonacci and Elliott Wave trading strategies event. So we have a great lineup over the next 3 days. And Anka, who's my partner on this series, is with us today as one of the guests for today's show. Also, Norman Hallett, who is also going to do a presentation for this event, and the option professor, who will be on as well. So you'll get to hear from all of them today, and then they are part of the lineup for the big Fibonacci and Elliott Wave event this week. So we're going to have a ton of great education all 3 days, and be sure to join us on TimingResearch.com for that. So, all right, so for today's show, you should be seeing my screen right now, and I'm going to go ahead and turn it over to the option professor, who will be moderating today.
Okay, thanks, David, and thanks everybody for being here. Last week we had everybody postponing doing any buying, and then today we're getting a pretty good sized bounce. So we got two great guests here today, Norman and Anka, and they're going to give us their insights. We're going to go over a bunch of different markets so you get a general idea of what's happening out there. But before we get started, you guys, as far as the S&P, Anka, let's step up and give us an idea of where you're thinking. We're getting a nice bounce here today, but is that all it is, or what do you think?
I think the market is going to be relatively shallow today and tomorrow because we don't have the catalyst per se. And as we're speaking right now, I think Apple has started its event. So I think that should be a little bit of a push for NASDAQ if we should have a push today. But I think that the market is going to have a temporary momentum with the CPI numbers and the PPI numbers that are coming midweek. And I think that all in all, it's waiting for next week's FOMC, and it's calibrating and rebalancing already for the quadruple witch option expiration, which is next week, next Friday. And as far as your question, like up or down, I think we're gonna be in a range or pretty much in a chop. But if we should be seeing some reaction, I'm moderate bullish on this action today. Moderate, very, very moderate.
Yeah. With regards to Apple, can we throw that up since she mentioned it? And it's a big event here. It looks to me like it's hanging on for dear life and
Yes.
could go into the tank here pretty substantially if this iPhone, shall we say, is less than overwhelming at $1,300 a phone, right? So what's your feeling on Apple?
Apple is holding really well. It has been holding on Friday when the market literally took another hit to the downside. And we're trading right now in a minor support zone, which is deriving from the prior pivot high that is from July. So you have that prior pivot high from July, and exactly where the price line is right now is the top of that July high. And we also have the line in the sand from the 20 SMA, which is that blue line on your chart. So we have had about 3 days, 3.5 days, let's say, of hold into that level. So it's really trying to defend that level. Those tails at the bottom are going to tell the story. If those tails are going to hold, and if we're going to get some kind of a rotation above Friday's high, I think that we may be ready to go. Apple will reveal the new operating system. I believe it's 18, and new details about Apple, their new Apple phone with the AI integration. So this could be very good news for Apple. I don't know if it's priced in or if it's really going to produce a reaction, but it sure does look like it really wants to hold and wants to push through this.
Yeah. I like to do the strangles on stocks, just looking for all heck to break loose up or down if the premiums are okay. This thing, as far as where it is on a chart, is like screaming, strangle me. But yes. I don't know, I'd have to price out the premiums to make sure they're not excessive. But this baby's either going back towards 235 or 240, or it's going to go into the soup. What it's not going to do is stay the same, I don't think.
I agree. As long
as
that's
the kind of thing I look for when I look for these
range, it's not going to go anywhere.
Right. I kind of look for things where, something's going to happen here news wise or event wise, and there's no way it's going to stay at this whatever point it is. We just had that with Google at around 170, 165. No way it was going to stay at 165. You strangle that thing, you're at 152, and that kind of thing happens.
Right.
Hey, Norm, why don't you take a bite at the apple here, Norm?
I'm laughing at strangling and screaming.
I went to Boston College. I went to Boston College, so I gravitated to Strangler because of Albert, whatever his name was.
Finney.
I forget his name.
These two recently, these Apple and the S&P look pretty much alike in the last couple of weeks. This charting, but I mean, I agree with for different reasons. Agree with Anka about the sideways movement. Anka used the word chop. It usually.
You're not talking about Apple. You're talking about the S&P now.
I'm talking about the S&P. Yeah,
okay.
and I think you could probably expect the same kind of thing. But chop, a minor chop. A chop. When I think of chop, I think big swings. But I think that we're talking about kind of wait and see, waiting for some of those reports at least to come out later in the week.
Mm-hmm.
But the about the fifth day back, when you had that large red candle that changed, that defined the test of the recent top.
Right.
I call that an extension candle when it extends, especially past a series of previous lows. As it did there, looks like about 7 or 8, 9 lows. It's taken out, maybe even 10. That's pretty definitive that we'll see more downside. But then you got to ask yourself, how far are we going? And although I don't draw the 50 and the 200, what I do is I measure that extension candle, that red candle that defined us, and I look for an extension equal to that amount. 70, 80, 90%. If I'm short and I'm taking a scalp based on that, I'll take 70 or 80% of extending the length of the body. I don't include the wick, and in that measure, looks like we've gotten there already. And I just think today's action looks like to test the 50 and just looks like more sideways action. I mean, generally the market is up, and it has been up for so long that I don't think you can fight the general undertow of lifting the higher prices. But I do think that that we're looking sideways for the next at least couple of days. And I mean, the CPI comes out on Wednesday.
Yeah.
But other than that, which really hasn't given us a lot of shake lately. I think they look for the producer price index as
well, the CPI is kind of being supported by owner's equivalent rent. So what they're saying is if they can take that block out of the pyramid will fall dramatically. Yeah. But I don't know that they're going to be able to drop owner's equivalent rent because it still costs a lot of money for people to rent places, and the housing prices have not given up much of their gains. So I don't know how owner's equivalent rent is going to drop in that environment, right?
Yeah, no, there's no question about it. And of course, here in Florida, with insurance prices going higher, I also think the whole global warming is going to be another influence on housing prices, and not only how to cool your house, but also, I mean, right here they've tried here in Florida Power and Light. They've got a deal now where they'll average your bill over the year so that you don't get.
We have that in Nevada too.
That's a move that says we're going high.
Yeah. I like it though. I don't like a bill that comes in as variant as like orange juice prices. You know what I mean?
Yeah. Well, it's a good.
Let's agree to a number and hit me every month. You know what I mean?
Yeah. Another Florida phenomenon, but yeah.
With regards to the S&P, you mentioned it's 50 in the 200-day. I got it at 55.05 and 51.47. Right now, it's a little bit of a monkey in the middle. You think if you got above the 55.05, which would be your 50-day, you might get a little bit more of a bounce here?
Yeah, I mean, if you look even down toward, I guess that's an RSI down there. Yeah, it's been, even if you took this chart back, you don't really have to do it for this, for what I'm saying. But generally, when we reach that lower area in the RSI, it's been fairly consistent. So. With previous lows. So, I would think that if we do get get above it, and I'm not sure we will.
Right.
I think the greater possibility would be a kind of a sagging market through this week, and actually seeing slightly lower prices before the end of the week. But I base that just on the influence of the double top, of having broken the 50 already. This gives people a lot of hope. Today's action that we'll get over, and I would caution traders to wait for the close if you're buying the market based on it's getting back above the 50.
And Tuesday can be a reversal day. So if we don't get above 55.05, for all we know, it'll be back in the soup tomorrow.
Yeah, that too.
Yeah. Do you guys put any weight on, like, the 10-year note went right down to the August 5th lows last week. So within a few weeks, we were right back at the lowest. Yeah, there you go. Right back at the low. Now, I've got a divergence in my stuff. See there, you got a big divergence on the RSI here. That tells me that this is possibly a point where rates are going to go back up again. And that might be, that might be something that'll affect the markets as well. But I thought going right back to the low, I don't know, is that telling us the S&P is going to go back and test that low? Because that's where the 200-day is, around 51.47, which is around the low of the last week. Anka, let's go with you. Do you see any significance in that the yields went back there? And maybe that might mean stocks might go back there?
I'm not really sure. The thing is that, if we start breaking lower in here, and my opinion is that we're going to be holding until FOMC. That's for sure. Technical pattern suggests lower for sure. We have those consistent lower highs and lower lows. We have broke the first level of support, technically speaking, on chart. So we should be heading lower based upon this chart. So I would like to keep it technical at this point.
Yeah.
And keep it as, simple as possible here.
Yeah. The only thing that sticks out that might be somewhat constructive is that difference in the RSI, because that's a significant difference in RSI.
Yeah.
And so if in fact we started seeing 380 or 385, that might, anybody who bought bonds down here thinking they're going down to 350, they might be left holding the bag a little bit.
Yeah.
The other, so anyway, on the stock market, I guess we're both saying, everyone's saying, I guess, that it looks like it could be choppy in here a little bit. And there could be a little bit of a wait and see until a little bit more data comes out on the CPI, and of course next week, and of course whatever this debate's going to be like tomorrow. Do you put much?
Oh my goodness, yes, I forgot about the debate, but I have to agree with Norman. I don't think the CPI is going to do much. I don't think the PPI is going to do much this week. I think that the element of surprise is going to be the reaction into the FOMC, although everybody knows what's going to happen. Sort of.
Now, Norm, I got a psychological question for you. People are kind of like, let's be honest. I mean, the unemployment rate of 4% is nothing to worry about. The wages going up in every unemployment report is nothing to worry about. Retail sales have come in twice what they expect. That's nothing to worry about.
That's worrisome. Yeah.
But everybody is worried that every time it weakens a little bit, it's going to turn into a gallop. In other words, of course, you're not going to keep the same JOLTS number as you did during the COVID crisis. So, I mean, the fact that they're going back down, everyone thinks that's a precursor to unemployment's going to go through the roof. I mean, in other words, psychologically, do you think people are, just extrapolating normalization into some kind of a collapse is coming? What do you think, Norm?
Well, my brother has an expression that when you get down about something, he calls it about projecting to the future. He calls it the misuse of imagination. When you worry, it's his definition is worry is the misuse of imagination. I think that's probably the biggest poison pill that a trader can make, projecting their own opinions on where it goes. Now, I think it's okay to do that, without the deep emotion, because you can prepare yourself with where you'll buy, where you protect, where you'll, what will happen, how you'll act to what you believe will happen. But also you have to also consider what you'll do if it doesn't happen. So, this is you learn it in trading 101 that don't let the market tell you where it's going. And I think, there's certainly enough, I don't know about you, Anka and Jim, but
I totally agree. Yeah.
My trading has been better than ever lately, because I believe that that the technical truths that we profess and that we emphasize are just getting clearer and clearer. And so I think that which flies in the face of guessing what you think is going to happen. You can anticipate, but I think that the problem with believing it's going to happen is when it doesn't, you're kind of rooting for your opinion, and therefore you're seeing it go against you for a while, hoping that it turns around to somehow make yourself right. In trading, it's great to be right and it's great to be wrong. The only right and wrong is, did I follow my trading plan? That's the only right and wrong. Right. Your tested, valued trading plan. So, I caution people not to, it's okay to get excited. It's okay to, to have your opinion about the market, but you have to put that aside when the market is live in front of you. And any planning and any anticipation really has to happen before the bell rings,
I agree.
Well, Anka,
well said.
When you're looking at this chart, rather than saying something is rolling over or anything like that, would you categorize it as just reversions to the mean? In other words, it kind of highlights the fact that you don't want to buy things after they've advanced tremendously, because there's a risk of it reverting back to either the blue line or the gold line. And basically, that's all we've seen as far as evidence right now. In other words, you got to pull back to basically the blue line neighborhood in April, May. That was a reversion. We had another reversion that was rather serious because of the Japanese unwind. And now we've just had another reversion basically to the ballpark area, the blue line. And, obviously this would be a neighborhood that if it holds here, people who think it's going to be, rolling over big time are going to be kind of wrong. Let's turn
I think that you'd have to consider the mean in current market. Again, that undertow is just so great. And I guess what you're saying is that when you see a lowering of pricing, that's not violent. You're really saying you're looking for a buying opportunity. Yeah. And to get back with the trend. I just think that if anything has been proven in trading the last 10 years, that the trend truly is your friend.
Oh yeah.
And great.
And also the new generation of traders, they haven't been through the crash of 87, or really they probably don't remember 08 or even the dot-com bubble. People with more experience know that these things can happen, but the new people have not had that happen. In fact, nuclear power plants like 3 Mile Island are being reopened. And I think in part because the demographics are that the young generation, can't spell Chernobyl,
Yeah.
So anyway, I'm just saying the demographics are really going to be powerful in the years to come, because these guys are going to get like $70 trillion, and they're not paranoid that the end of the world is coming. Yeah. Let's turn over to oil, because I think that's a big story.
Oh, oil is bad.
Yeah. Well, it's having a good day today, but boy, it got under everything that you'd ever want it to get under. So, is this thing going to go like down to like 50, or like, is it going to go down to like 50 or something? Or is this like the bargain of the century? It's probably going to be one or the other, right?
I don't think it's going to be a bargain here. I think that the price action is still going to be very difficult. And especially that I read some things through the weekend where hedge funds are definitely easing out of oil. So they have no interest in oil. I love those trend lines that you put there. Yeah. So the bottom line is that I don't really know if we're going to get any kind of action. So hedge funds are pretty much out of it. They have had it with oil. Oil hasn't done anything for so many years. In fact, it did that 2020 crazy reaction, and then during the pandemic, and now it's just, very much sideways. It's very sloppy. I've tried some swings into it this year in spring, and if you see those 3-4 bars right there off of the yellow line, I think it's the 200 SMA. That's what we traded. But other than that, I don't think anything is going to happen with oil. Really poor performance, and I don't think it's ready for anything. And like I said, hedge funds are really staying away from oil. They reduce their bullish bets for sure.
Yeah.
And to be very honest, this is the lowest level in like so many years.
Right.
And this is projecting a lot of concerns about rising supplies and weakening demand. So yeah.
What about
there's
XL?
not
How
participation.
about XL? Let's look at XLE. Does that mean these guys can't make money at these levels?
No,
or-
I think these guys can make money. It's just oil futures, I think. And that's what I'm gonna do. I'm just gonna stay away from it.
Mhm.
Yeah. So and XLE is great.
And it's
It
got
has the double bottom
it's got a
formation.
divergence down here too, Anka. You see
Yeah.
the low, again, the other low is much higher. So,
Yeah.
going back on the XLE back towards 90 would be a little surprising to people, but it could happen based on the RSI.
And this is the type of chart pattern that we have experienced in the Qs and the SPYs, in the diamonds back in 2022 when everything was downtrending, and then we had the turnaround in October. So very similar pattern, because we were still in a massive ongoing uptrend on higher time frames, yet the daily chart was making those lower lows and lower highs. It could potentially, so even this XLE is still under the major moving averages. It's still into that. It's not yet a double bottom because it hasn't confirmed the pivot, but it's trying to hold that support level there at 85. So it's 85 area. So it's still trying to hold. I don't see a reverse. So let me put it this way. I am going to stay away from it because I don't have a clear directional bias on it. And I don't have, the type of money where I would put it in XLE and wait for 5 years for the price to go up.
Right.
Yeah, so I think there are far better things that we can trade than oil. I think oil, and it's just like commodities. Like if you look at all the other commodities in the futures market, I actually am going to take them off my list. I'm a very aggressive trader when it comes to setups, and I look for swings, especially in agricultural products and energy and everything else. But now it's like, take a look at charts of corn and wheat and sugar.
No, they're all
mess.
they're all way down. In fact, somebody was making a notice that a year ago oil topped, a year ago the dollar topped, and a year ago rates topped. And so they thought the fourth horseman there is going to be the stock market topping. So they made an argument like that. One thing, Norm, on the oil, I'm still looking at backwardation, where we got October trading at 68 and change, and we got March of next year at 66 and change. And the EIA came out and said the inventories were kind of dropping. So that kind of makes you kind of feel like, there's something supporting it a little bit. But what do you have?
Yeah, no, I actually
backwardation. Is that
actually I've made my chart bigger in crude lately because I tell you two reasons. Well, first of all, I want to say that, well, actually one reason, but first of all, I want to say that starting tomorrow, the Elliott slash Fibonacci, I want to see what some of I'm not a huge Elliott. I understand and appreciate Elliott. But I always thought that, when something wasn't working out with Elliott, there was a bigger wave that was affecting it that I missed. And it's I think you're either a deep Elliott person and I'm really interested.
I agree. Yes.
Yeah, I'm really
I agree,
interested
Norman.
to see how
you're either a Mooney or you're not.
Some of the people who have expertise, hope they ask questions around this, because I'm going to be very interested to see what Elliott thinks about this. But I also wanted to mention that it really behooves the Democratic Party to see these oil prices remain low, and and I think I think that when you're in office, you have a lot more control over things, that little tweaks that you can make, whether it's releasing some from the reserves, or negotiating with a South American country, or whatever, or putting out a report on energy production, whatever. But I think that it could easily, we can easily see that 50 or 60 level before the end of the year. I mean, I really do see, whenever you see such strong support, as Anka mentioned, right in this area in the crude oil, the great thing about supports is that you got to respect them, but when they're broken, you really can get a run, as the majority of people are positioned the wrong way. So I'm really keeping my eye on oil, based on the year. But again, I really want to see what happens over the next couple of days with some of the Elliott people. So, if you're listening to us talk today, you may want to tune in to see what's going on, because I think this is the kind of thing that Elliott and Fibonacci could really have a clearer picture than I have.
So that this thing is in a wave to the downside, a 5-wave down right now, the acceleration phase, then that would be very nice to know if you can count it down to a 1, 2, 3, 4, 5 type of thing, or whatever.
Right.
Yeah. With regards to, we said, or I said, a year ago, the dollar topped. A year ago, rates topped at 5% on the 10-year, and the dollar index at 114 and crude at 82. Let's look at two things that haven't. Well, we already looked at one, the stock market. Look at the other one that hasn't topped yet, is gold. So let's put up gold.
Yeah, let's look at gold.
No, gold.
Well, I mean, like I say, if they're bringing all the elevators down, and the only two that haven't come down are stocks and gold, it would be nice to come up with some kind of concept that if they started to turn, they might join the party with the other three.
Mm-hmm.
And nobody's betting it that way, so obviously that makes it interesting to me right off the bat. I mean, how many people would say it's going back to 2200 or 1900? Not too many. And look at that RSI. Look at that RSI. If that was Mike Tyson, he'd be getting knocked out right now because his legs are gone.
Well, as long as inflation is the headline, you probably won't see much in the way of a huge correction in this. But when we talk about, I will have something to say a little further later when we go into some individual things. But unless this is the time.
I've been watching this too, and I think it's interesting that gold has actually outperformed the overall market over the last few years. I mean, that's pretty rare, right? I have to go back and check to see when that happened before, but this is the S&P 500 line.
Mm-hmm.
This is gold. So
pretty critical neighborhood up here, no doubt about it, right?
Could be the threat of democracy rally.
When you get that far away from the moving averages, though, you have to give some respect to the concept of reversion to the mean. Mm-hmm. I mean, it's either parabolic and we're at 3,000 and it was just a ride you had to just jump on and close your eyes, or somebody's going to hand out coffee and they're going to maybe bring it back down to a more of an equilibrium. Mm-hmm. So, and the RSI right there is at a point where at 70, it either could go back up to 80 or 90 if something happens, like an event of some type, or, if it wanted to moderate, this wouldn't be a ridiculous neighborhood to see a correction. And it's not really bet on very heavily. I mean, do you find a lot of people saying, I think I'll short gold? I don't think you'd find 5 of them in the whole CBOE.
Well, I mean, it's not surprising lowered interest rates are in the future. The chart is continues to be bullish. There's not a lot of reasons to believe that we're going to come down.
No, there's no doubt. There's no evidence right now other than, and that's flimsy evidence, that the RSI is lagging. But it's certainly the first step. The first step is you get exhausted and then the trend changes. It doesn't change before you get exhaustion generally. Let's take a look at what do you call it, the QQQ real quick, and the SMH. I mean, those things, there's been a huge migration out of growth into value. Started in June. I've got a growth to value index that topped out in June and has rolled over. And ever since June, things like utilities and stuff like that are outperforming tech. So there was a big switch. Some people think it's already fully valued, though, because if you look at utilities and you look at healthcare, they're trading like a tech stock.
Mhm.
So, Anka, you watch this kind of stuff. I mean, do you think that this switch from growth into value has run its course for a while? Or do you think that that is going to be a theme that might even go into 2025?
What I think is that due to the multiple algorithms that we have out there that are not thinking as much as we are, as humans, they just see the technical pattern, and I don't think they're taking the narrative. I think that whatever they're set on doing and whatever the environment is forecasting, for example, the technical charts, I think this is going to be the key here. So I'm going to stay outside of narrative, and I'm going to say this. There are two intriguing points into the cues. First of all, we have the high from July, and then we have the lower high from August. So we have a high and a lower high. The line in the sand is the 200 SMA. And you can see here that we had a tap at the end of August into the 200 SMA from which we rotated. We went up a little bit, but that high right there in August was unable to actually challenge the prior high that we had right there in October, in the month of July. But if you look back at the chart, and you can see here back in the tap on the yellow line, like right to the left-hand side of the chart, there was another right there. Yeah. Exactly where you had your cursor. The Qs have an affinity of testing the 200 SMA more than any other index. And whenever it's, kind of having some issues, and whenever there are some technical pullbacks, we often see that the Qs are pulling back to the 200 SMA. Can you shrink the chart a little bit more? Because I'm curious. No, shrink it on the other side. Shrink it. Zoom it in, zoom it in. Yeah, exactly. So we have that May. If you go to the left-hand side, look at all the taps into the yellow line. See? So it has that affinity to the 200 SMA. It gets down into it, and then it rolls back up. It gets down into it, and then it goes back up. So I think that and by the way, as long as the Qs are still going to stay, I would say strangled between, or let's say captured in between the 200 SMA and the 20 SMA, nothing is going to change. They're just going to get some algo reactions from both MAs. They're going to get some buy reaction off of the 200. They're going to get some sell reaction until we get a catalyst, and we need to get something into the market. And honestly, this is going to be a day by day a situation. I was looking at Broadcom, for example, at Nvidia. Broadcom was the last stock that reported earnings, and not bad. I mean, the earnings really good. I mean, they didn't really meet the expectations of Wall Street, but they had really good numbers, and they had impressive numbers. So I just think that people over dramatize the pullbacks that are happening in the market. The market needs to exhale at some point. And even when you're looking at the performance, I went to finviz.com. I don't know if I can put it up here, but I went to, let's see if I can put it up here, and we could see the 1 year performance, which is amazing. Okay, let me see if I can pull it up here. Yes, I can. If I can share the chart real quick. So
before you do, oops, okay,
yeah.
I'll go back to that chart later. I just had a question for you, Anka, because
Okay.
I found it interesting. Could you re-put up that chart that we just had? Yeah, I guess that's the 200 you've isolated.
Yeah, those were EMAs that I had up, but now it's the SMA.
Okay, you see the touching, and this is, I think it's important to note. I mean, that this is why the 200 is so critical. When it's under, it's tough to break. But you see, it's touched from the time it crossed back about this time last year, I guess.
Yes.
And yeah, right in there, you had
Yes.
the next touch was in a particular period of time, and then the second touch, the most recent, was. I'm looking at a loping, now this is almost another, Elliott type question. Is this? Is there a timing mechanism that you look at when you're looking at the 200? You seem to have a lot of knowledge about dealing with the 200.
No, I'm not looking at any timing, and I do use a hybrid of Elliott waves. I'm not using the Elliott wave per se. So when I was, getting my training, my mentor would say like, my mentor is like literally old school. And he said, yeah, I've learned Elliott waves, but with these algos that are, really aggressive in the market right now, by the time you wait for complete Elliott wave to happen, you have missed the trade and the stock is up more than 30%. So you're missing the boat on a lot of movements. And what I do focus on is on price action and its affinity and price repetition and it's actually easier than any fib or Elliott waves. Look at the symmetry and look at the reaction overall that it had. And look for rotations, not necessarily daily rotations. This happens to be a daily chart, right?
Mm-hmm.
But for example, you can look at a weekly chart or a monthly chart and look at what it's following. For example, here you can see that the price action is so far away to the 200 SMA, and yet you're seeing that affinity to the 200 SMA as well. But you're seeing that the price action is still very extended from the 200 SMA. So I was taught that when the price is very extended from any moving averages, and any moving average for trading is the 20 SMA and the 200 SMA. So I don't know where the 20 SMA is hitting right now because I don't have it here on the chart, but it's very extended from the 200 SMA. And in time, and that downtrend to the prior tap into the 200 SMA was in 2022. Mm-hmm. That is when we had the downtrend. And then you can see the double bottom and rotation off of that point. So I was taught, whether I'm day trading or swing trading, to look in particular for the tops into the 200 simple moving average. And that is considered like an excessive pullback. Like if you're trading, I just follow the 20 SMA to the T. And if there is an asset that is in power trending, then we should follow the 10 EMA. So super, super simple. Yeah, and as far as the FIBs go, I'm not really sure that they're going to help in this situation. I mean, yes, fibs are okay to use in order to predict like how far the price can pull back. And I'm pretty sure you agree. But it's not like, oh yeah, that's nice to know that that's going to be an area. But with so many catalysts right now that we're having in the market, and this is definitely a news-driven market, I don't know how that is going to react. So I pay more attention to the price action itself and look at that, the symmetry of the chart, and see what the past price action has proven in the past, because price is all about repetition. Mm-hmm. That's the way I see it.
Anka, we're out of time now. Can you share your chart, go through some of the stuff you do day in and day out to help people with their trading, and then we'll switch over to Norm in a little bit.
Okay, sure. But I just want to share this real quick because we were talking about this.
Yeah, I'm saying, right. But you share your screen from here on out.
Yes, I will. Okay, so you guys see the screen, right? So I was talking about the yearly performance in stocks. And even though we're having this pullback and everybody's going crazy about like, oh my gosh, like Broadcom is down, like last week, Broadcom was down like 18% or 13% or something like that. Like, yeah, Broadcom was down, but it's still up 63% year to date. NVIDIA is still up for the year 129%, Microsoft 22%, Amazon 27%. So what are we talking about? I mean, why are traders freaking out? Because this is still a very bullish market. This is a 1 year performance right here. Okay. All right. So I'm going to share a little bit of what we do here at Trade Out Loud. So this is our website. If it's gonna pop up, I don't know what's going on. Okay, so this is our website. We do host a trading room every single day, and this is actually my income source. I'm day trading every single day from I'm trading the power hour basically from 9 o'clock till about, we have the room open from 9 o'clock to about 11:30. Today we were done in 30 minutes. We had Dow and NASDAQ long. We took profits on it, and we wrapped up the room very, very quickly. So my trading room is focused on the power hour and the power hour moves. We do a pre-market game plan from about 9:30, for about 10 minutes from 9:20 to about 9:30. And then we wait for setups to form. If we have a setup, we take a trade. We don't have a setup, we don't take a trade. I trade between 1 and 3 trades a day. There have been days where we, and especially last month, where we took like even 4 or 5 trades in a day because we were more into the scalping environment than trend trading because of the massive range that we have been having in the markets. It's 100% guided trading room. Everybody can follow with these. I teach my traders that, you know, what they need to do for the entries, the stops and targets. I provide them with all the guidance and the help. We provide them with exact parameters, entry, stops, targets. So I often tell my traders that if they are not in profitability and if they have not been making money, just quit what they're doing and just take my trades. Follow me for about a month before you actually, you know, trade your account. We have a lot of prop traders. We have a lot of, you know, we actually have some hedge fund guys in the room. We have a lot of analysts in the room as well. So we do have a lot of individuals that are trading really large trading accounts. And we do have a plan for everybody. Like if you're very new to trading and say, hey, I don't know, you know, what's going on, which plan is for me. We have a 1-day pass, which is not renewable for $25. We have a 5-day pass, which is for $100, not renewable. So here you come and go as you please. And then you could start out with 1 day, or you can start out with 5 days, which is much better because I don't know how much you can understand from 1 day, but we do have a monthly membership. And if you want to opt for the yearly, this is the plan right here. And these are renewable. And again, you know, if traders have any questions about the futures program, I'm here. We also run a swing trading service for stocks and ETFs. Yeah, this is the oldest program. This is 14 years old, 14 and a half years old, is still running super strong. We've beat the S&P 500 every single year for 14 years in a row. So very proud of that. And if you guys are interested in that, we have a monthly plan and a yearly plan for that. And we have transparent track record for all our trades since the inception of the program. So every single trade that I called is right there tracked. So that's it.
What markets do you generally focus on, Anka?
I focus on everything that moves. So basically,
So it could
you
be
know,
it could be buying a stock, could be buying a stock option, could it be buying the E-mini?
no. I'm just doing swing trading, so no options.
Okay.
But we have a lot of traders in the program that do trade options, and they adapted for options trading. But no, I trade common.
So you trade the common stock, and then you
Yes.
trade the E-mini or the NASDAQ future, or?
No, in the stock swing trader program, we only focus on stocks.
Gotcha.
Stock swing trading and a little bit of long-term trading, but we want to separate those, and we're going to have a brand new program for investing, and that is going to be totally separate for long-term trading.
Yeah.
This only focuses on swing trading. So swing trading is something that you know, we tend to capture profits from 3 days to about 2 weeks.
Yeah,
period.
because
So
you obviously everyone has different kinds of money, and the money that you're going to sit on those long-term stocks, like you know, like Nvidia goes up for 4 years in a row or whatever it is, you know, that's a nice thing to just sit on and hold, and then you have your swing trading money, and you can do both in one stop here. So that's good.
Yeah. For example, we have I called Costco today as a swing trade. Let's see if I can open up here. So let's say Costco. Okay, so this is the buy right here. This is the line in the sand, a lot of support. We had an entry at Costco at 833. So basically this is going to be an add here into the 894, 895 level. So it triggered today, and we're looking for a target into this high right here. So this is going to be like a shorter term trade, possibly for about 5 to 6 days, 10 days, depending on how fast it's going to go. This is going to be just the first target. We have targets into the 1000. So yeah, these are the type of trades.
Okay, great. Hey, Norm, could you show your screen and go over some of the stuff that you're doing?
I'm just getting over Tower. Did you say Tower of Power, Anka?
Power Hour.
Tower Hour. Well, I remember
Power.
Remember that?
Power.
You're still
Power
a
Hour.
young baby, don't waste your time. That was the Tower of Power. You're still a young man.
They were with the Earth, Wind, and Fire for a while.
So let me. These are a couple of. I've just been doing strictly prop trading. I've been just so enamored with it. I've been coaching people on getting funded and then money in their account. It's been very exciting for me to really find an avenue for some of the smaller money that really don't get to trade 50, 100, $1 million. And they're good traders. But so I've been really marrying this idea of helping with prop trading. Here's a couple of accounts I traded today, and both of these were just 2 trades. I want to show you what I did today. I'm concentrating on this. This is where I concentrated. This is the gold-silver spread. The spread of gold and silver. And whenever I see that silver, what this is saying is that silver or gold is it's 88.4 times the price of silver. That's kind of crazy. You know, when I first started in the business, it was 50 to 1 you looked for. And when it got over that ratio, you went ahead and sold silver and bought gold. When it gets up like this, you're buying silver and selling gold. So I'm looking for, when I see this, I go to it alerts me to believe that we'll probably correct in this ratio so I look for opportunities to buy silver and sell gold to kind of bring this relationship down. And what triggers me in is and what I do is I buy 2 contracts of silver and sell 1 gold against it, because that gives the value, that'll give equal value to the move. Your 2 contracts of silver is worth just about the same as 1 contract of gold. So you're just looking for the spread. And the great part about it is that, when I get a signal to go long in the silver, that's when I'll put on the silver and immediately put on my short gold. So I look for the short-term signals to advance me, and had a couple of them today, resulting in the profit that you saw. So I will say that those who think that spread trading is safer than outright trading, it's not true. I've seen more accounts busted out believing that they can stay in something like this longer because it's safer. It's not. It's all risky. It's all risk, and it's you've got to follow your trading plan. But I did want to show you what I believe is going to be consistent trades. Now, what happens is when I see a correction of $1,000, I'll take it. I almost treat it as a scalp. So when the difference, because it tends to pop, and so you have to be aware. Anyway, I just wanted to show you that just in case. Now there are some extremes. You see what happened in the extremes here and the extremes here. I really don't count those. So we're very, very close to that 100 to 1, which from a body standpoint, and this is a monthly chart. Is this a monthly? Yeah, this is way back to when I started here. It was mostly the 50. When it went in this area 50, this is where I started my career back here. In any event, I just wanted to show you that also. So if you're interested in learning about prop trading and actually having me coach you, this is a program where I believe that the mental and emotional issues are just as important as the structure of your trading plan. In fact, they're married, and therefore, if you have a problem with your patience, you really shouldn't be trading a trading plan that gives you 1 or 2 signals in an 8-hour period. You're going to run out of patience. So you want a trading plan that has a frequent, reliable trigger, and that's really what. And since most people have a problem with patience, this particular loaded gun simple trading plan that's offered here, I've really tailored toward especially prop trading, where you have to be very tight in your ability to take. You don't want to take big losses in here. But I did want to show you this bonus somewhere of the 90 days of one-on-one with me. And if you'd like, I'm about to do a presentation later in the week. This particular one tomorrow I'll be doing. I've got a discount code that I would be willing to give you that would be active this week. If you go to thedisciplinetrader.com, if you go to thedisciplinetrader.com and just click on the contact area, just send me a message and just say, hey, I saw your fabulous presentation. You want to give me a compliment if you can in that. Just say that you saw my presentation and mentioned a coupon code too. to really make even the loaded gun offer even more attractive. So their money, yourprofit.com will bring you to this page where you can read about what we're doing in prop trading, theirmoneyyourprofit.com, and then hop on over to thedisciplinedtrader.com and we'll I can help you out there. Anyway, that's my spiel.
All right, you guys, just quickly, I was going to mention the option professor. I'm working with trading indicators up in Montreal, and we have two things that we provide for you. One is an options masterclass, absolutely free, and that's 3 sessions, 6 hours of very comprehensive knowledge. A lot of people need to learn more about options, and this is how we help you. Second thing was you have option ideas. I focus on strangles. What are strangles? That's calls and puts, buying them simultaneously on the same stock. And you're looking for big volatility and you have limited risk. Obviously, last month in August was a very good time for us because when the VIX goes to 65, as long as you have both sides covered, something should work. So this is something I think is very good for people because it gives you education that you need and it gives you ideas that might benefit from you. We have a webinar tomorrow. And it'll be tomorrow afternoon. If you'd like to get the link, you can either go to optionprofessor.com like you see on the screen, or you can go to optionprofessor@gmail.com and just shoot me an email and say, please send me the link. But again, if you're interested in options, you need to know more. We're making that happen by giving you the course for free. If you're trading options and you'd like ideas that we come up with, and obviously I'm putting a lot of time and effort into finding ones that'll work, you get that on a month-to-month basis with us. So you want to find out more about it, you can go to the meeting tomorrow. Can't make the meeting, just shoot me an email or go to the website and put your contact information. I'll call you up personally and explain how I can help. All right, you guys, anything else we want to say before we hit the top of the hour? Anka, do you have any parting words here as far as any special, you have any special, like you said you had some seminars or something coming up, right? Webinars?
We have, so I'm really looking forward to tomorrow's event. We have so many amazing pro traders that are going to speak tomorrow about Fibonacci and their take on Fibonacci and Elliott waves. And I can't wait to share my strategy on using Fibonacci and Elliott waves. And like I said, I'm using a hybrid of Elliott waves. So this is something that is much, much more easier and to apply and to trade with, and you're actually going to be able to apply it on your day-to-day trading, and it could happen and it's happening in trading markets because you cannot have an Elliott wave in a non-trading market, in a stagnant market. So I'm really looking forward to that. We also we're going to have a massive event next week where we're going to have a 3-day free event of introduction to futures trading and what you need to know to get started generating income with futures by trading only the power hour. That's it.
And Norm, when is your event going to be happening this week with the Timing Research Fibonacci Elliott Wave Show? Is that tomorrow?
There's that Tower of Power again, the Power Hour. I like it. My presentation is at 12 noon tomorrow, and actually Anka teased it for me. I believe that the one use that I keep on giving myself when it comes to Fibonacci is when I look for a corrective action in a trend, and I look for the market to go back to that trend. So I'm going to show you how I measure that with Fibonacci. The crazy thing about Fibonacci is that it never quite hits the line exactly.
Exactly. Yeah.
It either is a little bit above it or a little bit below it, and you really, again, it's I think Fibonacci almost more than any other indicator, you got to wait for a close on a bar. In any event, but I want to show you how I do it and how I judge whether it is a trend that's turning, or whether this truly is what I believe it is likely to be, and that's a return to the trend. So I'm going to show you how I use Fibonacci to do that tomorrow at noon.
And I'm pretty sure it's going to be a much easier way than actually waiting for Fibonacci or Elliott, right?
You're saying, Norm, that it doesn't go to 61.8 or 38.2 to the penny every time?
Yeah, and I just want to meet, I want to meet the person who put the 50 in there. Because, because that, I give it a grain of salt, but I guess people
It's
just
just a
look for
measured
half.
move. Yeah, it's not a fib.
Yeah, it's not a fib, but they've made it a fib. I don't know.
But
Other
I
than
love the way you put it. Yeah.
if I ever run into that person.
Well, the mathematics of the fib is a lot easier for me to put my arms around than the counting of the waves. But I think a person like Anka, who has taken the Elliott wave and the Pacific Ocean worth of ways of interpreting it and maybe whittled it down to a digestible meal, I think that'd be very helpful, right?
Well, my experience is that when you reduce the parameters of something very complicated, it often becomes a better result, and that's, I think, what you're talking about, Anka.
Yeah, yeah. I think that's very helpful for people because I've been doing this for decades, and I'm aware of the Elliott wave, but there's many different interpretations, right? The way they count the waves.
Most of them are dead, so.
All right, I want to thank Anka and Norman for being here today, and you guys don't have to wait too long because it sounds like they'll be with you tomorrow. And then, of course, David, if somebody misses the meeting, they'll be able to get a recording of it.
Yeah. So, yeah, if you are not registered for the event yet, you can just go to TimingResearch.com/join, or sorry, TimingResearch.com/stjoin. And you'll get instant access to this page, which has some bonus PDFs at the top of educational info. And then also, you scroll down on this page, there's a countdown to the start of the event, and then also the full schedule for all 3 days of the event. So Anka is on at 11 a.m. tomorrow, and then Norman will be right after her. And then Jim, I don't know if I have actually confirmed this with you yet, but I have you scheduled for 6 p.m. on Wednesday.
Well, I was wondering what I was going to do that day, so now I know.
Yeah. So.
Well, obviously, there's a lot of people there who have a lot of information to share, so people would be kind of foolish not to take advantage of it. And again, Fibonacci and Elliott wave are a couple of the main ways a lot of people figure out when things are going to go up or down. So I think this is a pretty lucky deal for people. If you start reading these people's names off, they're all pretty well received in this in the industry.
Yeah, we got a great lineup.
Especially Jody. Yeah.
Yeah, Jody's also one of our partners on this series and or this event. And we've been doing this theme for several years now, and this is definitely the largest one so far. So I think maybe 23, 24 presenters was the largest we've ever done on this theme. And I have it listed as 30 right now. I have 27 confirmed. I'm going to try to get a couple more in there, but 27 at least. 27 hours of great Fibonacci and Elliott wave education we're going to have for you. So Todd Gordon is a big name in Fibonacci and Elliott wave. Ala Peters, of course, Avi Gilbert, Carolyn Broden.
Carolyn will be there. That's good.
Yeah. Jeffrey Turnmeyer, and all these names are great educators, and so yeah, we have a ton of great education for you this week. So TimingResearch.com/stjoin. Again, if you're not registered, if you are registered, just watch for the email info, and you can also come to TimingResearch.com any of the next 3 days, and there's always a link on the homepage to join the event while we're live. So yeah, so be sure to join us. And then also, if you search for Timing Research on YouTube, Substack, or your favorite podcast app, you can get the recordings that way as well if you're not able to attend live. And as of a few weeks ago, Timing Research I've been hosting events on Timing Research for 10 years now. So, and the full 10-year history is available on the Timing Research YouTube and the Timing Research site for you to review anytime you want.
There is so much information there.
Yeah.
It's ridiculous. Yeah.
Yeah.
10 years. Yeah, it's time to enter Tower of Power music now.
Need a theme song I can turn on. But, all right, so yeah, I just want to thank my guests again for today. Anka Metcalf of TradeOutloud.com, Norman Hallett of The Disciplined Trader and TheirMoneyYourProfit.com, and the Option Professor of OptionProfessor.com. All right, thanks everyone, and we'll see you back here at 10 a.m. Eastern tomorrow.
Thank you, guys.
Thank you, guys. Have a great one.
Okay, thanks, guys. We'll talk to you soon.